Welcome to another episode of Travis, Can I Have This? Today, we are looking into the future of your practice, and we are trying to help you answer the question, how much money am I going to make this year? Coming up with a financial plan for your business is a fundamental thing that a lot of sophisticated businesses do, but a lot of small business practice owners fail to do. But it's not that hard to do. So we're going to talk about why you should be setting financial goals for your practice. And then we'll even get into how to do this. I have a spreadsheet that you can use. We'll go through the nuts and bolts. It might get a little nitpicky on how to do this, but it is boots on the ground, how you can actually set a financial goal for your business this year. Even if you're listening to this in February, March, June, July, August, whenever you're listening to this, it is never a bad time to set a goal for the next year or the next quarter or the next month on what you can do financially in your practice. Let's get into it. Before we get into the nuts and bolts of how to set a financial projection or a goal for your practice, let's talk about the why behind this, the touchy-feely stuff. Now, a lot of times when people talk about setting goals, I kind of cringe a little bit. Part of it is, I think the more times you go around the sun, the more you start to feel like things are just the way they are. You kind of feel like you can't change your fate, and I don't want to set another vague goal that I'm going to break in a couple weeks. I also had the craziest, I remember going into 2020. I was so jazzed. It was like, it was the end of 2019 and I was just thinking about 2020. I'm like, that's such a cool number, such a even, nice, round number. I guess accountants like numbers, right? I was like, man, 2020 is such a cool number. And at the end of 2019, anytime we were talking to friends or at dinner with friends, I was always asking people like, hey, what are your goals next year? What are you planning to do? It's going to be a big year next year. I was like jazzed out of my mind. And then 2020 comes. And, first we lose Kobe Bryant, which just shocked the world. That dude he just had this invincibility about him. And it just felt wrong in so many ways to lose Kobe. And then obviously COVID happens and the whole world is just in shock. And if you had any goal in 2020 that it for anything, COVID probably impacted. You wanted to go to the gym? No, not today. You wanted to eat better? Well, you can't even get food at the grocery store, right? It was like everything was thrown out the window in 2020. And it kind of jaded me, honestly. Like it's been really hard for me every year to kind of get up to set goals. However, I don't care how you feel. Just joking. But if you have a business, goal setting is a little bit different than touchy-feely. Any large business, or I should say any business that is run properly, which a lot of large businesses are, they often have an entire department that is solely in charge of financial planning and analysis. They call it an FP&A. It's a whole thing in the finance world. I do FP&A. I do financial planning and analysis for businesses, which basically is I set projections, I set goals, and then I monitor our projection, I monitor our progress, and then we adjust projections appropriately as the year goes on. They often do this on a monthly or quarterly basis, obviously on an annual basis. And they often do this, they have a 5-year projection as well. So there's a whole department that is doing financial plans for the business. A lot of times for dental practice owners, we get a lot of beef for being a small, inefficient operation. A lot of DSOs are preaching that, hey, as a dentist, you didn't go to school on how to run a business. The amount of times I've heard that, it is getting to the point where it offends me. I'm not even a dentist. It offends me when people say that, yeah, I know I didn't go to school as a dentist to run a business, but everyone's reminding me of that. Thank you so much. Well, This is one of those things that people can pick on you for not having a legit business. You don't even have a projection this year. You don't even have a plan on what you're going to do. I think it should be fairly non-negotiable as a business that you should try to have a goal, a projection, a budget. Pick the word that offends you the least, that motivates you the most. You should have that for your business. I think just because you have a business, you should have it. But also, if you think about, do you want to make more money? Do you have a desire to have a different lifestyle, either by having more money or maybe a different lifestyle in having more time? A big reason a lot of people become dentists is because of the lifestyle. And are you having the lifestyle that you intended to have when you studied for the DAT? I would say there are a lot of dentists that did not have the right expectations coming into the profession. Now, maybe if your parent was a dentist, it's a lot easier to have the right expectations. But even then, your parent could have had a significantly different situation with Delta Dental than what you're dealing with, right? So if you, but if you think about wanting that lifestyle, and if you don't totally have that lifestyle in check, then you should probably have a plan on how you can improve it. I'm not saying that you have to have a plan on how to solve it entirely, but you should start to make progress in the direction you want to go. Again, I'm primarily talking from a financial standpoint. I am not talking about, clinically. I'm not talking about personally, like I want to be a better person. I don't care about that stuff. All I care about is money, right? I'm an accountant. Just joking. I care about your money, right? And your time. And are you doing the things to move the needle in that direction? I just feel like there's a lot of people that want to be better, but aren't doing the exercise to actually get there. And that's what I'm talking about today. Let's set a financial projection. Let's go through the exercise of making a plan for this year. And what is it really going to take to have a better lifestyle? Now, there are a lot of studies that have been done on goal setting. And I guess there's these two guys, Lockie and Latham, and they did a lot of studies. They devoted their life to goal setting. I wonder if they set some goals on how to do that. But they did some various studies. And there's 5 principles that they found that if you want to be successful in goal setting and projections and planning, then you need to follow these 5 things. And some of these are like kind of cliche and things that you've heard before, but we'll just talk about them just so that we think about them in the light of a practice's goals. So the first goal is you need to set specific goals and not vague goals. So if you say, hey, I just want to have a better lifestyle, I want to have better balance, like you're probably not going to accomplish that. But if you say, hey, I want to go from working 20 days a month to working 17 days a month, but I want to make the same amount of money. Okay, that's a good goal. I want to go from making $300,000 of income to $400,000 of income. Okay, that's a very specific goal. Let's work towards that. Second, your goals should be challenging but attainable. I hate this one. Like, dude, how are you supposed to know what is a challenge but attainable? Like sometimes I just bugs me. But I think, if I said, hey, I wanted to go from $300,000 of income to $400,000 of income, I think that's actually pretty attainable. That is challenging, but attainable. If I said I want to go from $300,000 to $1 million of income, that might not be possible. You need like 3 more operatories and you need like 20 associates. Like you have to change like a whole infrastructure of the business. So, but make sure it's challenging, but attainable. Third thing, feedback is critical. Now, when we think about feedback, if I set a goal to run a marathon and I sign up for the marathon and I'm going on regular runs, those runs are effectively feedback on how I'm doing in preparing for the marathon. If I'm not going on any runs, I have no feedback on how my fitness is for that marathon. The same thing applies to a practice. If you have a goal to make $1 million and you're not checking in during the year, you have no idea on how much progress you're making towards that $1 million. It also, for the feedback, it is most beneficial if you see your actual data next to your projected data. That is oftentimes hard for dental practice owners to set up. Sometimes your accountant or bookkeeper will send you current data, but it's not accompanied with your projected data. That's something that we're trying to streamline at our accounting firm. It does take a little bit of work to set up that infrastructure, but ideally, you do need that feedback to know how to change course or what things you can adjust along the way. The fourth thing is commitment matters. Now, this sounds a little touchy feely, and as I think about it for practice owners, how does it really apply? Well, I think you really have to care about the goals. Like, if your lifestyle is pretty good and you're setting some pretty lofty goals, like, you probably don't have enough pain to really care about these goals. But if your lifestyle has some really big pain points and you're like, man, I am just like always $5,000 negative cash every month. I'm burning through savings. I'm just stressed about this. I need to figure out how to make $5,000 more per month. And you're really motivated on that. You're a lot more likely to accomplish the goal. So you need to be committed to the cause. What's your why behind the goal? Thinking about practice goals as well, while we're talking about commitment, I think a lot of the practice goals will also depend on the commitment that you have from your team. You can help your team set specific goals, challenging goals. You can help give them feedback on certain things that you need from the team. But do they really care? and sometimes we have this attitude as business owners of, well, hey, I'm paying this person a wage to do what I want them to do. They should do whatever I ask of them. And there is some truth to that, but you also are working with mere mortals in this world, and people need some motivation. And this is a whole can of worms of like bonus incentive plans. And I'm not saying that you have to do that to accomplish these goals, but you should understand where your staff is coming from. What is their motivation level? What kind of people are you working with? And are they likely to help be committed to the cause? They aren't going to care about increasing your take-home pay. They aren't going to care about giving you more time to go golfing. They don't care about those things, right? So don't expect them to care about those things, but understand where they're coming from. And if there's opportunities to help them get committed, you want to take those opportunities. The fifth thing that from these studies that these two guys found is if the task is complex, you must have a strategy. So what this means is if I'm saying, if I want to do a goal, that's fairly simple, you probably don't need a strategy. But if the goal is complicated, you will need a strategy. And changing income in your practice is for sure complicated. So you need to have a strategy behind that. And that's what we try to highlight in our projection is, hey, these are the dials that need to move. Now that you know how much the dial needs to move, let's go make a strategy on that. The most common factor that's going to change is your daily production goal. And you'll often see in the projections, if you're averaging $3,500 a day in production, and if you dial that up to $4,000 a day, you will be blown away at the amount of increased profit in your practice. But how do you get from $3,500 a day to $4,000 a day? You need a strategy for that. We're not going to dive into that, but I think even getting to the point of knowing where you need to go, hey, that's like, 2 more fillings a day. That's, so many more cleanings, like whatever it is, you need to know what that number is so that you know what you need to dial up. All right. If I haven't already scared you away at this point, we're going to dive into the nuts and bolts of setting goals. Now, I don't know if I'm going to continue to do this in a podcast form. I'm not quite sure if this will translate as you're listening. There are some things that are pretty technical that we're going to go through. I do have a spreadsheet. If you go to the resources section on my website for this episode, you can download you can download a spreadsheet that will walk you through everything that we're going to talk about in case you're not taking notes or not sure exactly how all of this will work out. I'll try to talk about this from a high level, but we are going to go through a cash projection and talk about the things that you need to do to prepare for the cash projection and how you enter the information and how it flows into a business plan for your practice. So first, let's talk about what you need to get in preparation for your projection. There are 5 things you need before you can do a projection. First, you need to know what your historical production per day is. So you need to go into your practice management software, your Dentrix, EagleSoft, Open Dental, whatever you're using, and find your average daily production. Ideally, it would be great if you had this on an annual basis. But if you don't, you could even just go through at least 3 months worth and find your average daily production. Some softwares will have this pretty easily for you. Some it may require a little work. For example, the most work you would need to do is look at how much you produced in the month of December, then look at the calendar in December, see how many days you were working, and say, hey, my total production was this much divided by the number of days I worked. Hey, I'm averaging 3,000 per day every day I work. Second number you need, and you need that for every provider in the practice. So think every dentist and every hygienist. At the end, I personally group all the hygienists. I personally group all the hygienists together. I'm not saying that's the right thing to do, but that's what I think simplifies our projection a little bit so that we can digest the information a little better. Obviously, you'll have some hygienists who are higher producers than other hygienists, but the way most hygiene departments work, there's oftentimes turnover, there's oftentimes temp people that come in. It's nice to have a standard for the whole department for hygiene, in my opinion. But I'm not saying that's the right way to do it. Second thing we need is also going to come from Dentrix or EagleSoft, and we need to know your collections rate. So if you look at the month of December and you look at how much you produced, and then you look at how much you collected as reported in Dentrix, that will give you a collections rate. Now, this number will fluctuate a lot because of timing differences on different things about insurance payments and everything like that. So make sure you average the collections rate at least over 3 months, ideally over a year. I would say a safe number, if you don't want to go through that, I have it in my worksheet, is 95%, meaning you collect 95% of what you produce. I have seen practices be close to 98 or 99%, and I have seen other practices as low as 90%, which is not a good rate. But so you may want to know exactly what your practice is doing, but as a good starting point, it should be about 95% of what you produce, you collect. That's the second thing you need. The third thing you're going to need is the number of days you're going to work each month this upcoming year. So depending on what year you're in, go through each month of the year, look at a calendar and see how many days you're actually going to work. This is actually a really good exercise. I think a lot of practice owners already do this because your front office staff bugs you and is like, hey, I need to know when I can book your calendar and when I need to block off certain days. So you're probably already doing this to some degree. For me personally, this is like not natural. Like I very much fly off the seat of my pants. Usually my wife is like, hey, we got to take a trip. And I'm like, yeah, we're next week. Great. Yeah. Let me make it work. And then I like have to reschedule things and make it work. You can't really do that as much with in a dental practice because there's a lot of people, you have to plan out your schedule. But if you did it for a full year, do it as best you can. That will help this projection enormously. Hey, I normally take off spring break for the kids. I normally take off 2 weeks in the summer. We usually take off the holiday this week. Like look at your whole year and literally pick out each day this year that you plan to work. And in the projection, we're going to need to know the number of days that you will work each month of the year. You'll also want to do this for an associate as best as possible if you have one in your practice, and for hygiene as much as possible if you have that in your practice. After we have the day's work, the fourth thing we need, it's kind of a big one, is your profit and loss data. So we need to know how much your overhead has been trending in the past. Right now, it's the month of January at the time I'm recording this. And for all of my clients, we're using data from January through December of the prior year. We're using 12 months worth of data to get solid overhead data to figure out what their overhead is as we project into the future. Now, you may not have your financials through, the 12 full months. So if you have it through 10 months or 11 months, as much as you have, you want to use that data. You can still use that and help you project into the future. And you want the data to be as recent as possible. So instead of going, if you wanted a full year, you could go to a year ago. I would instead use the most recent 10 months if you have a P&L for the most recent 10 months. So depending on how your data is available will depend on what information you actually need, but you will need a profit and loss. You will then need to enter that in my worksheet. And the way I have it organized is by labor expenses, occupancy expenses, supplies and lab, marketing, and then administrative costs that are fixed and administrative costs that are variable. Now, in each of those categories, I have all the sub expenses so that you can go through and see, like, if you're not quite sure what a fixed administrative cost is and what a variable administrative cost is, you can look at my worksheet and it will have fields of like office supplies or insurance expenses and things and what buckets those go in. The reason we categorize things in those buckets is some of those buckets are fixed costs and some are variable. The fixed costs, like rent, that does not change if you make more money, right? Or if you make less money, the rent will never change. Alternatively, variable costs like supplies, that will change if you're doing more work, you're going to use more supplies. We want to know the fixed and variable costs as we do projections. This is a powerful tool that will help you notice that if you produce a little bit more, because your fixed costs are not changing, your income starts to increase quite a bit. Another category we will need in your profit and loss are the doctor expenses. So anything that's related to the owners or the doctors, will want to break those out separately. Now, the last piece of information that we need in preparation, we still haven't started the projection yet, but the last piece we need in preparation is your debt service. So how many loans do you have and what are your payments to each of those loans each month? Organize that data and that will tell us what your monthly debt service is. How much do you pay each month in debt? And we want to know the principal and interest. So combine both of those in the debt schedule. Once you have all of that information, you're ready to start your projection. The projection is mostly a cash projection. We are not factoring in taxes at this point. It can get a little tricky, and I think it takes away from the main objective of trying to stay cash focused as we look at this projection. First, you'll enter your beginning cash. How much cash do you have in your bank accounts today? And then we will enter the two big variables of each provider, how many days are they working each month this year, and what is their production goal each day. So for the first month, for example, in this client, I have them working 20 days this month, and then they're going to produce $4,000 each day they work. I have 30 days of hygiene in this example, and the hygiene department is going to do $1,000 of hygiene. These numbers combined give me a total production of $110,000 at the end of the month, but I have a 95% collections rate. So it calculates $104,000 of collections this month. Now, I will acknowledge that at this point, I have not taken into account the delay that it takes to collect money. So if I did produce $110,000 and I submit that to insurance companies and I'm trying to collect it from patients, it takes at least about 30 days to collect that money. Now, I'm not accounting for that because I don't know if it makes that big of a difference in how we're looking at your total cash flow. Usually it snowballs and it carries over time. However, if you have a practice like an orthodontist practice, you probably don't want to use this projection because your accounts receivable is a lot more fickle than a typical dental practice. After we get the collections number, the spreadsheet will automatically calculate your overhead percentages based on what you entered in your profit and loss. It will factor in any owner expenses, any owner draws, the loan payments to show you what your net cash flow is each month. In this client's example that I'm using, which is what I'll include in if you look at the spreadsheet so that you can see an example, is $7,000 per month. Now, just for illustration purposes, I'm going to change the number of days this client is working from 20 days a month to 21 days a month. So right now, before I make the change, this client is projected to increase their cash by $87,000, how I have the projection. But what if I change it to working 21 days a month? If this client works 21 days a month, her cash now increases $126,000. That's about a $40,000 increase in bottom line cash by adding one more day a month in production. One more day a month, $40,000. Is that worth it to you? I know for this client, this is actual client data that I'm using. I know for this client, it is not worth it. She has 3 little kids and she would rather spend time with her kids. And that is totally fine. She would actually probably want to see how many fewer days she can work and still generate the same cash flow. So this will give you those tools to be able to do that and see what you need to change to get the desired financial result from your practice. Once you finish your projection, I would save it and look at it throughout the year and compare it to your actual financial results. Ideally, it would be great to get your team aligned with these goals to help you really accomplish them. Thanks for listening. Hopefully you find this helpful. And in the show notes, you will see a link on where you can go to find the resources to actually do this projection. Thanks so much.